Welcome to this week's edition of the Construction CPA's Coffee Cafe. I am the Construction CPA, Lisa Raish. We are dropping the hammer on cash flow problems so you can build things that matter. All right, so what are we going to talk about this month? And we're going to continue to talk a little bit about, because we're getting a little bit closer to the deadline, so let's start the month off and talk a little bit more about tax season, right? So what does this mean for you? So we see it all the time. Everyone thinks, oh, I'm going to be fine until you get that tax bill, right? Because we don't know what it's going to be, right? So this is where your bookkeeping mistakes can really turn into tax surprises at year end. No one likes to be surprised when they get that final tax return. So let's talk about some of the things that you can do in order to kind of tee yourself up a little bit better. Maybe clean up that bookkeeping throughout the year and then put yourself in a better position come the beginning of the next year in order to do your tax returns, right? So, you're thinking that everything's great. And then, someone like me sends you an email and says, hey, you owe a lot of money. Sadly, it makes us very, very unpopular. We don't like to do that. None of us like to do that, believe me. You don't want to hear it and we don't want to have to tell you. So let's talk about how we can at the least clean up or work on improving your bookkeeping so that, your books don't actually tell you that tax surprise at year end. You actually know where you are throughout the year. And again, it's not a big, oh goodness, I can't believe it. No, I had messy books. I had no idea. And now, oh, I had no idea I'm going to owe so much money. Okay. So why does this matter, right? And we go over this year after year with a lot of clients. Why does this matter? Your tax return for your business is only going to be as accurate as your bookkeeping. If your bookkeeping is inaccurate, is half there, is half a mess, is in pieces, it's really hard to put together a solid tax return for you where you don't end up owing tons of money because, again, there's maybe pieces missing or things are in the wrong place, right? So that's the thing that you want to make sure you get ahead of. It's not just, a lot of times we talk about having good accounting to make decisions. This is, you need to have good accounting in order to get a good, clean looking tax return, right? And not be surprised at the tax bill when you actually get that return done. Sometimes small errors, expenses in the wrong place, that kind of a thing can turn into a big problem or a big tax bill or, oh, I didn't know kind of thing at the end. So again, having a good set of books is going to, again, help you to see where you are in your business, but also what do I think my tax liability is going to be and be able to get ahead of it and not be surprised. It's the surprise at the end that is the worst. If you know that throughout the year that you're going to have some type of tax bill, that's one thing. Being surprised when that return is done is a whole other thing. Many of the people that we work with aren't necessarily overpaying on their taxes. It's like I said, that surprise, right? I didn't think it was going to be 50,000. I only thought it was going to be 20, right? That's a very big difference. So those are the surprises that no one wants to get. And then we, as your accountants, your, tax preparers, your CPAs, your EAs, don't want to give you those results either, right? And so your bad books really are going to give you no visibility into your business and ultimately no ability to plan. Not only not business plan, but not tax plan. So, your taxes don't create your problems. They just reveal what's already been happening in your bookkeeping or sometimes in your lack of bookkeeping. So, what are some of the real reasons why these mistakes turn into surprises, right? So you're going to have many people have incomplete or inaccurate job costing. We talk a lot about this on here, right? Job costing is a very big deal in construction. You've got costs that aren't tied to the jobs correctly. When they're not tied to a project correctly, they're kind of like this lingering thing out here that no one thinks about. And again, it maybe gets lost. It gets in the wrong place. It's whatever happens to it, it's just not reflecting correctly, right? And so that's going to be a big piece for you. Maybe your profits are going to look higher than they actually are, right? We see that all the time. Oh, I thought I was profitable. Oh, well, you had a bunch of things in the wrong place and your projects actually aren't profitable or they're like minimally profitable, right? So if your bookkeeping is not done correctly, your accounting is not done correctly, those are things you're never going to see. And in some cases, sometimes people are going to possibly they're overpaying taxes on, we call it sometimes this phantom profit, right? It's not really there because, well, there are expenses that were in the wrong place, that didn't get accounted for accurately, right? Again, we don't want you to overpay. Some of you are going to have to pay taxes, and that's a whole other video. But at the end of the day, you don't want to be surprised with that tax number, right? Another thing that turns into kind of these weird tax problems is you've misclassified expenses. Far too many of you, sadly, commingle your business and your personal. So there are business and personal expenses that are mixed together, right? When somebody actually starts to pull those out of your bookkeeping, you're like, oh, all of those expenses I thought I have were actually personal. They don't belong in the business, and they come out, changes your number. So that means, you've got expenses that are coded incorrectly, or maybe they're not in there at all. And so if you miss a deduction that you are actually eligible to have, you are in fact going to probably pay higher tax, right? So again, we don't want you paying any more tax than you need to, but if you're missing expenses, they're not in the right place, it's hard for someone to help you try and save on that tax bill if things aren't handled appropriately, right? You can't try to find, hey, we possibly do this or that? And is this credit available? Because we don't actually see any of the expenses in there to determine if we even could get this one type of thing, right? That's the thing that most people don't realize, is that when your books are all over the place and they're a mess, it's really hard. We're just trying really hard to get you something accurate to even be taxed off of. Never mind, are you overpaying or underpaying? We're just looking to build something that's as accurate as possible. And that's a feat in itself. So if your books are accurate, then in fact, you can start to do proper planning. But if the books are a mess or they don't exist at all, none of those things are ever going to happen. Sometimes your revenue is recorded incorrectly, right? So what type of method of accounting are you using? Are you using cash? Are you using accrual? How are you accounting for that? Are you sometimes putting invoices in? Are you sometimes recording at cash basis, right? Do you have a combination of systems in there? So those are things that you want to make sure that you're recording accurately. You don't want to overstate your income. You don't want to understate your income. Again, if you do one of those things in one year, the other half of that is going to flush out in the next year. And I think that's what most people don't realize. It's like, oh, I got it. The error was this year and my number was really low. Well, all those oopses that we had this year that gave you great results in your mind, all those things kind of flush to themselves out into the next calendar year. And now you're like, wait a minute, how much do I owe? Because those errors typically are going to have to flush out at some point, right? And they usually kick back and kick in the wrong way, and it becomes very expensive, right? So if you are recording things as accurately as possible, then you at least minimize those types of errors. And timing, right? Like what I just talked about, timing issues could potentially shift, right? There's I paid as many expenses as I could at a year end in order to get them in this year. Great. And if you're cash basis, all those, that revenue that you're going to collect next year has no expenses now, right? So yes, you brought your number down this year, but what have you done to next year? So those are the things that you want to make sure that you understand, that there's going to be a cause and effect to each one of those things that you're doing. For your clients that, for those of you that are accrual basis, some of you just ignore the WIP. Like the WIP doesn't mean anything. Your revenue and your costs just aren't matched properly. You're making big adjustments at year end for one or the other. Again, it's going to flip one way or the other. And that ultimately turns into, a surprise profit, a surprise tax bill this year, or, oh, there was no tax bill this year. But guess what? It's that fix. It needs to fix itself, and it fixes itself in the next year, and it goes the other way. And then typically the other way is not to your benefit, and it's quite costly. So when you ignore these things, we don't pay attention to these things, something like accounting for your work in progress the proper way, again, comes back and can swing back and bite you in the behind in that year or in the subsequent year. Falling behind on your bookkeeping just in general, right? I'm not doing the accounting. I'm 6 months behind. Hey, it's February. Can you do all of my accounting for last year? We do those too. We usually get at least one of those every year. We're currently working on one right now, right? So it's months behind. We're doing, we're working on the accounting for the 12 months ago, right? And what happens? We are trying to grab as much as we can, get everything in the right place. Yes, we're trying to meet deadlines. Um, Client may have forgotten what some things were. So now we're like, well, what about this thing that happened 12 months ago? They don't know. So again, you've fallen behind. It's months worth of work that you're trying to get done. We're rushed. We're making really, not great decisions in some case, trying to get the right things as best as we can in places. Client doesn't know. So we're just trying to figure out what to do with the we don't knows. And believe me, we get a lot of those answers back in our portal. We ask questions, I don't know. We're like, okay, how do we handle this? These errors, right? These I don't knows multiply. They will multiply over the months. And then you get to the end of a year and you're like, well, I've got this handful of I don't knows throughout the year. We didn't know what to do with them. And so this is what we did with them. We either threw them in as revenue or we threw them in as an expense. And again, it's not consistent. There could be errors in there. We do the best that we can. Client can't remember. We do, what we can with it, but no one's a magician. So again, you're not getting the best result that you possibly can if your books had been done in a timely fashion throughout the year where, hey, here's a question for you for something that happened last month, not 12 months ago. Um, we see it all the time. It's, oh, my CPA will fix it. Well, again, I wish I was a magician. I might have gotten better results for some clients over the years. But, we as the CPAs, we are taking those books and we're, I know I personally look through them and I'm looking to see, that everything looks as reasonable as humanly possible. But unless, if we're taking these books from you and somebody else has done them, unless we've gone back and we've entirely rebuilt it from scratch, we're relying upon what you've given us. Again, I do kind of an overall, I call it a sniff test, right? And looking for things that look completely out of whack compared to what you've had in, results in the past, things like that. But it's hard. It's hard to give you a good, the result you want when your books are a mess. And we're trying to put together as much as we can to give you a tax return. So that bookkeeping, again, not only super important for making business decisions, but super important for, again, ensuring you're not overpaying on your taxes one year or, underpaying this year and overpaying next. Again, those are the kinds of things. The other thing is it's really hard to build out a tax strategy when the data you have is completely unreliable. It's hard to, it's that garbage in, garbage out, right? How can somebody help you build a business plan, an actual business plan and a tax plan if the historical data that you're working off of just, it doesn't make sense. It's not accurate. It's not actually been cared for, right? It's very hard for someone to help you and help you with that aspect of your business. So the other thing we see too is, it gets expensive. It gets expensive when we have to come in there and clean up your books after you've had somebody working on it, whether it's an outside bookkeeper or, you've done it yourself. It's expensive to have us come in and clean it up, right? It's more cost to you. Again, we do the best that we can to make it as accurate as possible, but I'm sure, we probably here and there have missed things that there was no way that we would have known. And so, yes, you're getting a less accurate tax return. You're potentially not getting tax deductions that you could have or credits just because it's not in an orderly fashion to provide you with that level of planning that you may in fact want, or that accuracy on that tax return. We do as CPAs and EAs the best we can with the information that we're given by clients. But like anything else, I mean, from our perspective, if we are not the ones doing your accounting, we're relying upon you to give us the most accurate information that you can in order to do that tax return. As I mentioned, I do a sniff test on it, right? But I'm sure there are things that get through that we just don't know, right? So I don't know that you could potentially be eligible for credit XYZ because, it's not reflected anywhere in your books. And so now, we don't even know that you might be eligible for this thing. So it's that really taking that messy pile and trying to create a return out of it. You're not going to get the best results. You aren't going to get, in some cases, you're going to end up possibly overpaying because we can't find all the things that we could, right? So that's where your bookkeeping becomes so important. Doing that bookkeeping and that accounting on a monthly basis, getting it as accurate as you possibly can. It is not just for your business planning. Yes, it's super important for business planning, and we talk about this all the time, right? You can't plan on what you're going to do next, if you don't have good historical information to base some of your decisions off of, but you also can't tax plan either, right? And so it's two things. It's running a good, solid, profitable business, but also doing tax planning and make sure, again, you are not overpaying on taxes, but if you're profitable, you're going to be paying some kind of tax, right? So don't make it so hard to make decisions for yourself, figure out what you're going to owe in taxes. I don't know until, the return is done. And no one wants to be in that position. We don't want you in that position. It makes it hard for us to do a great job for you. And, it makes it hard for you to do any kind of planning, business planning and tax planning, right? So again, your tax return isn't just this thing that is done for you in March or April of the next year. It also becomes a part of that overall business plan too. We're tax planning and we're business planning. All right. So what are some of the things that you could do today, right? What can you do today that will help you with regard to, your accounting, your bookkeeping, and ultimately what your tax liability is going to look like? First and foremost, you need to keep it up to date on a month to month basis at the minimum, right? You've got to keep it organized. In some cases, for the larger clients, somebody should be in that file at the minimum on a weekly basis, but you need to be doing your bookkeeping monthly, reconciling balances, and you don't wait until tax season to do this. It becomes really hard to rebuild things all the way going back 12, 15 months prior. You don't want to find these problems in tax season. If you stumble across an issue somewhere in the middle of the year, you can have that thing worked out before you even get to tax season. Big one. We talk about this probably, I'd say, at the minimum every other video. You've got to separate your business and your personal. Clean data is going to give you accurate business deductions. If you're guessing and you're commingling, it doesn't help you from a tax perspective. It doesn't help your legal entity. It doesn't help you from a legal perspective, right? By commingling, you need to keep it separate. You are allowed to take profit, draws of profit. You take a salary if you're in that type, if you're in a corp, a C or an S, pay yourself, and then you pay your personal bills out of your personal bank account. You do not pay personal bills out of the business. And vice versa. A lot of times we don't tend to see as much with the business, people paying, out of their personal account for the business. It's usually the other way around, right? Break it, transfer the money out, and then you pay separately, right? Your mortgage should not be paid through your business, and similar, your car payment and the kids' tuition and, the grocery store visit and the Costco visit last week, right? That should not be in your business. You take a draw from your business, a distribution from your business, you're paid from your business every week. That money goes to you personally, and those payments come out of your personal account. This I will I don't know, separate business and personal may actually be on my tombstone. I'm not really sure, but you've got to break those out. It's really important. For our construction clients, make sure you are job costing. If you have a WIP, a work in process, you've got to be tracking that WIP. These are going to show you your real profitability on these projects. It's not just about the tax bill at year end, it's about your profitability. If you are not profitable, again, if you aren't profitable, you're not going to pay any tax, and that's a whole other problem. We see that clients, are not profitable like over and over again, and hey, great, they're not paying any tax. Woo! but you're not profitable. So you've got a laundry list of other problems, right? That's like tax, the tax man is the least of your worries if you're not profitable. So you've got to be tracking your job costing and doing your WIP reports on a monthly basis. Crucial for your business. You need to be reviewing the financials regularly, right? You've got to be looking at them monthly or at the minimum quarterly, but really monthly, because you are going to be able to see where you are throughout the year. No one wants to look at that December 31 bottom line number and suddenly that's the number. Oh, that's going to be the number I'm going to get taxed on. Oh, no, you don't want to be surprised. So not only are you reviewing your financials on a monthly basis and you're reviewing your results and you're reviewing your results against what you projected, it's also on a quarterly basis. What do I think I'm going to owe in taxes? Because, hey, we are in fact profitable. We've got a good profitable business. We're good at this. We make money. The money's coming in the door. I'm going to have a tax liability. What is it going to be? No one wants to find that out on April 14th when they get a tax return. They're like, oh, by the way, I owe, with a lot of zeros. No one wants to realize that at that moment in time. Again, if you're reviewing your financials throughout the year, you're saying, oh, I'm month over month, year to date, I am profitable, going to have a tax liability. And honestly, don't wait until tax time to plan to do your taxes. And that opens up a whole other, laundry list of issues, right? Tax planning happens during the year. We tax plan for clients in Q4 for the next year so that we can ensure that they maximize deductions, credits, whatever it is. We get ahead of it. You're not going in after the fact, after the year is dead and buried, and doing tax planning. That's just not even an option for you. You've left yourselves almost zero options. So don't wait until March 15th when you're doing that business return to think you're tax planning. No, you want to be tax planning for the year you're in right now, not for the year that's already dead and buried and gone. So again, your surprises on your tax returns don't just come out of nowhere. It just doesn't poof show up on, on Tuesday, April 12th, right? It is going to, in many cases, going to show itself throughout the year. Why? Because you're looking at your financials on a monthly basis, on a quarterly basis, you're seeing what your profit is. I am going to ultimately get taxed on this profit. What do I think my liability is going to be, right? It doesn't come out of thin air. It comes from those books on a monthly basis, on a quarterly basis, and you know what is going to happen in your business. So your bookkeeping mistakes, they can be, sometimes they're small, but they don't always stay small. Just like your cash flow problems, your bookkeeping mistakes can ultimately snowball into much larger problems, i.e. causing you, heartache at tax time. Again, makes your CPA and your EA very unpopular with you. That's not how they want to be. I know that's not how we want to be with our clients. We don't want to be unpopular when it comes tax time. So we want to know how they're doing throughout the year, and we want to do estimates and see exactly what we think that they're going to owe. And we don't want to be surprised when we actually get that final tax return and we see the number on the bottom, right? You don't want to be surprised either. So next week, we are actually going to start talking a little bit more about WIP and job costing. So we're going to be kind of pivoting a little bit with topic over the next couple of weeks. So hopefully you come back and you see us. We're talking more about work in progress. So this is a really important thing, especially for those of you that are doing these larger projects, which tend to be, lasting longer periods of time. So it's super important that you're aware of where you are with regard to the overall scope of that project. All right. I look forward to seeing you here every week. I will see you next week, and have a great weekend.